Welcome traders to the next video inside our YouTube channel.
In today's video we're gonna be talking about how you guys can catch sniper entries.
We receive like a lot of questions when people join and they start trading actually, and they have the misconception. They think that since we have to wait for a candle closure to enter the market, those traders and the members inside our community, they think that they should always wait for 2 hours, 4 hours candle confirmation, right, in order to enter the market. But that's not exactly how you get your sniper entry, because the movement for a 2 hour or 4 hour candle already happened, right?
Yeah, and it's something everyone wants to know, you know? Everyone wants to have those nice sniper entries where you have a good risk reward, and when you enter and you're already in profit. So that's something we found very interesting to talk about and to show you guys how to get this done.
So the people have to understand that top-down analysis, it's pretty much only and mainly for you to understand what's going on within a currency pair on a bigger picture. For example, whenever you are on a daily time frame, you know that whatever is to happen on a daily time frame, for example, you are waiting for a Fibonacci retracement to hit its take profit of about 500 to 600 pips of a movement. So you know that that's going to take about 3 to 4 weeks to fulfill, and you have to understand that within that huge movement, the market is still makes higher lows, or lower lows and lower highs inside smaller time frames. So that's pretty much what we're going to explain today, right?
Yeah, so that gets you to the point that you gotta know the overall bias of the pair before trying to make any sniper entries, to try to catch any good trade like this. You gotta know the overall bias of your pair.
With all the tools and all confluences that we use inside Ether Forex community in order to trade, it also can be applied on smaller time frames. So for example, when you know that, let's use a pair for reference, USD CAD. If you know that USD CAD is to melt, okay, it is to go lower for whatever confluence you have, but you're trying to wait for a 2 hour confirmation candle or closure. But you can also go to smaller time frames such as 1 hour, 30 minutes, and 15 minutes, okay? Not forgetting about the overall direction, weekly, daily, 8 hours, and 4 hours top-down analysis that you have done. And then you filter a candle formation on the smaller time frames. So that way, whenever a 2 hour or 4 hour candle will form, you're already within the trade, you're already on a trade, and you already made 20, 30, 40, 50 pips, okay? So you don't have to wait a lot. But remember that we going in or zooming into smaller time frames doesn't mean we are trading, we are going to scalp, we are in an intraday trade. No, we're pretty much following the overall trend, right, Guy?
Exactly, and especially on the days that you see a lot of volatility on the market, especially on weeks full of news and fundamentals, you're gonna see, if you wait for a bigger time frame confirmation on a candle closure, you're gonna have a lot less risk reward. Your pips, you're gonna lose, let's say, a 50 pips movement by waiting for a 2 hours or 4 hours candle closure.
Yeah.
And that's not what you want. You want to get entries on the resistance and the supports you have placed. You want to get in the top of the market structure that you have found, and you want to do that on the days that there's a lot of volatility. You want to do that on the smaller time frame, so you can catch the good trades and be in profit as soon as you enter the trade, okay? That's not something is always going to happen, but there is a way to do it, okay guys? And that's what we're going to show you guys today.
Yeah, and not to mention as well, that whenever you wait, for example, what he mentioned, that whenever there's data releases, that volatility kicks in and the market spikes up 50 to 100 pips in a matter of minute or 5 minutes, and then if you wait for that candle to close, you know that in order for you to enter the market, when you enter the market after a candle closure, your stop loss should be underneath the candle closure if you're buying, or above the candle closure if you are selling. So if the candle that has closed, it's 50, 60, 40 pips, so your stop loss is already 40, 50, 60 pips. So for you to have a 15, 20, 30 pips stop loss, you have to sniper enter the market, and that's pretty much how we're gonna do. But please don't forget that it's 100% based off bigger time frames, that we zoom in to smaller time frames, as Guy has mentioned, respecting our psychological levels of resistance, psychological levels of support, and then we act 100% believing and trusting our overall analysis. Sometimes we even enter the market when the candle it's not in our favor. For example, we will sell when there is a bullish candle being formed, or we will buy when there is a bearish candle being formed as well. So, but without further ado, let's jump onto my computer and I'll give you an example that happened this week and a few other examples as well. So here we are, and this is USD CAD. As mentioned, this is one of the pairs that I'm gonna use as an example. So I'm gonna show you a few more. Guy's also show you guys his trades and his pairs, okay, given as example for a sniper entry possibility. So if we go to the let's go to the 8 hour, for example, okay, we can see that we have been in a massive consolidation range, 0.34 to our psychological level of resistance around 1.35. So that gives us around 100 pips of a range, okay? But if you're following all the videos and our free blog as well, I've mentioned that the overall direction for USD CAD remains bullish, okay? It hasn't changed. I believe that it still has to make a high in order to do whatever the market psychology needs to do. So if we go to the 4 hour time frame, we can see that yesterday we had this huge shooting star, kind of, you know, huge weak rejections are at 1.35. But what we're trying to show you is we had 1, 2, 3, 4th touch. But you're asking, Wagner, why did you sell when you know and you were saying that the overall direction is bullish? Simply because if you're following DXY as well, yesterday we managed to make a higher high, okay? So you can see that that was a higher point than we did in April, around 98.37. So when I saw that, I knew that we would rapidly decrease or rapidly go bearish, because we were extending and extending just to fulfill the market psychology on DXY. So with that being said, I also knew that this was a respected psychological level of resistance, 1.35. And when I saw DXY going up, I could have, okay, let's suppose that I was going to wait for the 4 hour candle closure in order to enter the market. So we're now in the 4 hour. Let's go to the 4 hour time frame. We were in the 8 hour. So in the 4 hour time frame, let's suppose that we sold, okay, right after this 4 hour confirmation candle. So let's have it around 40 pips of stop loss. And I do not trade 1-1 trades. It's always 2-to-1 minimum. So I would have to extend my take profit all the way to 80 pips of take profit, so it can be of a 2-to-1 risk reward. Okay, so that's pretty much what I do. I'm not saying that you need to do. I'm just using my own example. So that would be the scenario on a 4 hour time frame for a sell-off in USD CAD. So you can see that we have around 40 pips of stop loss, and 81 pips of take profit. So this risk reward is 2-to-1. if you were to enter with a 10, let's use $1 of a pip, for example. So you're risking now $40 of a pip. $40, so you're risking $40 because it's 40 pips times $1, which is your lot size. Okay, and then if you were to profit, you were gonna make $80. So it's 2 times what you were willing to lose. But let's go now to 1 hour time frame. So you can see that we can still see the same movement, but now with few more candles. I'm gonna leave this risk reward tool on the right side, and I'm gonna go now to the 15 minutes time frame. And this is where the beauty starts to happen. So we knew that 135 was a psychological area of resistance. So with all the confluence that I gave you, when I saw this hanging man, okay, this hanging man formation at 1.35 at 15 minutes time frame, I sold. So I entered the market on a 15-minute time frame based off my top-down analysis. Okay, I entered with 15 pips of a stop loss only. Okay, and I was able to catch, I was able to catch 30 pips of a take profit. But you're asking, or you might be wondering, how can you profit the same amount of pips or the same amount of dollars on a 30 pips take profit, and then on a 80 versus a 80 pips trade? It's simply because if I was risking $40 on a 40 pips of stop loss trade, I can risk the same $40 but divided by 15 pips of stop loss. So my lot size was gonna be $2.66 cents per pip. So let's suppose that we entered on a 15 minutes time frame, but we are also expecting the market to melt the same amount of pips. Let's use our major psychological area of support of 134 as a final take profit, for example. Okay, so you can see now that our 4-hour entry would have been a 1.83 risk reward, and our 15-minute time frame entry, purely and mainly based off higher time frames, would give us a 6.43 risk reward. And remember that the smaller your stop loss, the bigger your lot size. So on this scenario, you would have caught 96 pips, and 96 pips times 2.66, which would have been your lot size. You would have made $255.36 versus $80. So I hope you got the idea on USD CAD. Now I'm gonna pass it over to Guy so he can show you one example on his pairs as well. And yeah,
guys, so one of the examples I'm gonna show you guys, one of the most recent ones I had, it was GBP USD. This was yesterday, I believe it was yesterday, and it was an entry around over here. We are on the 4-hour time frame currently, and as you guys can see, this huge week was about, I think, a 30 or 40 pips week, and that 70 pips actually, and that's where my entry was. I'm gonna step into the smaller time frame so you guys can see a little more. GBP USD has melted the past week, and I was following this movement since over here, but by over here, by reaching into 1.2700, I was out of the trade, and I saw this retracement. On the 2-hour we can see as well the week. On the 1-hour time frame we can see the rejection, and my entry was about over here, was on the 15-minute time frame. I saw this rejection of the whole psychological area of resistance, and I entered over here. So I caught this movement to this resistance. So the trade was around here to the resistance. Okay, so 100 pip to a 30 to a 30 pip stop loss, I believe it was. Not like the other pairs, GBP/USD is a very volatile pair, so the stop loss are usually gonna be a little bigger, but the take profits are gonna be bigger as well. Okay, so as you guys see, if we were to wait for a 4-hour candle closure, this trade wouldn't happen. Okay, it would be a too big of stop loss on this whole week. Okay, following the trend. Okay, it closed back inside the MAs, following the trend, and now I believe we are to go lower. That was one of the most recent ones, and this week as well, we had this beautiful entry on Litecoin. Okay, for the people on the group, I had mentioned the $85 level of support, and the trade looked like this. Even on the 4-hour time frame, you could get a good entry over here on this pair. Okay, but that's something I want to talk about too. If you want to catch sniper entries and you're not able to be in front of the computer all day, you can do buy and sell orders. Okay, based on the pair. You have to know the pair you're trading on to be able to do that. Okay, because some of the pairs, especially like the GBP/USD that I showed you guys, is too volatile, so that's a pair I don't usually put buy or sell orders, because like the last example, sometimes the week goes past the level of support or the resistance, and the trade could get a stop loss. Okay, so that's something I leave for the pairs less volatile, just like Litecoin. Okay, on the Litecoin, I sent it on the group this trade yesterday, and it was just fulfilled to TP2. We're now looking to TP3, and I entered the trade actually here, but I sent it on the group on 86.750. Okay, TP2 was over here, and you guys see, because I had the delay to send it on the group chat, it was past my entry point. But my entry point, I had a buy order at 85. Okay, because it was an exact level. So my trade on the Litecoin, it was like this, is small stop loss. Okay, I put a 30 pip stop loss because I had the buy limit on a strong level of support, and I believe that the price wouldn't push much lower than this. Okay, just like it did the previous time, it just touched. So that is another tip for how to catch sniper entries. We wanted to show you guys the most recent examples that we had for sniper entries, and we also gonna be uploading more videos on sniper entries when market gives us opportunity to find some more, so you guys can always be on top of these entries with us.
So we're now going to be recording videos every week, okay, almost every day, exclusively for you guys. So if you have any questions, just comment below. We read every comment, okay? We're going to reply to you, and then we're going to gather all questions from you guys and then explain as deeply as we can, so no questions can be left on the table. All right, guys, so this is pretty much it for this video, and we will see you on the next video. Peace.